In 1997, a Canadian mining company was worth $6 billion. It had no gold. The story everyone knows is simple. A small exploration company in Indonesia found one of the world's largest gold deposits. Geologists confirmed it. Investment banks backed it. Institutional investors poured money in. Then auditors discovered the core samples were salted, stuffed with gold fragments to fake assay results. The scheme collapsed. Fortunes evaporated. One geologist died. The rest went unpunished. That's the consensus narrative. It's also incomplete. Start in 1989. An unremarkable Calgary oil and gas promoter named David Walsh registered a shell company called Bre-X Minerals. Walsh had no geology background. He'd spent years in the petroleum sector, learning the mechanics of raising capital from retail investors. He understood hype. He understood prospecting claims. He did not understand ore. In 1993, Walsh's company acquired exploration rights to a property in Buseng, East Kalimantan, Indonesia. The concession was remote, dense jungle, minimal infrastructure. Previous explorers had dismissed it. Walsh hired a geologist named Michael de Guzman to run the operation. De Guzman had worked across Southeast Asia. He was ambitious. He was also broke. Between 1994 and 1996, Bre-X released a series of drill results. They showed gold, not traces, significant grades. Assay after assay, core samples pulled from the Buseng property contained visible gold. The numbers climbed: 50 million ounces, then 100 million, then 190 million ounces. For context, the largest gold mines in the world contain 30 to 50 million ounces. The Toronto Stock Exchange noticed. Bre-X stock traded at pennies in 1994. By 1995, it hit $5. By 1996, $40. By early 1997, it crested at $286. The market cap reached $6 billion. Retail investors in Canada, the United States, and Australia bought shares. Pension funds invested. Major banks, Lehman Brothers, Merrill Lynch, Goldman Sachs, issued reports declaring Buseng the discovery of the century. The accepted story pins blame on de Guzman. He salted the samples, it goes. He smuggled gold fragments into core samples to inflate assay results. The motive was simple: ambition, greed, ego. De Guzman wanted to be the geologist who found the century's greatest ore body. In March 1997, facing an independent audit, de Guzman jumped from a helicopter over the jungle. His body was never recovered. Case closed. But here's where the narrative fractures. The salting required more than one person. Assaying is a controlled process. Samples are weighed, documented, tracked through a chain of custody. For gold to appear in dozens of separate assays across different labs over multiple years, the fraud had to be systemic. De Guzman alone couldn't have done it. Examine the timeline more carefully. In 1994, Bre-X hired Kilbourne Engineering to conduct a feasibility study. Kilbourne was a reputable firm. Their engineers visited Buseng. They collected their own samples. They sent them to independent labs. Those samples also came back positive for gold. If de Guzman salted every sample Kilbourne touched, it wasn't amateur hour. It was industrial-grade sabotage. Now consider the Indonesian government. Suharto's regime controlled mining concessions. Bre-X didn't own Buseng outright. They held exploration rights. Any major discovery required government approval to develop. In 1996, Bre-X needed a partner to move from exploration to production. Freeport McMoran, the American mining giant, was the obvious choice. Freeport had the capital, the expertise, the political connections in Jakarta. But Freeport's own engineers conducted an independent audit in early 1997. They drilled cores on the Buseng property. They ran assays in their own labs. The results showed almost no gold. The ore body didn't exist. Freeport told Bre-X the deal was off. By March, the news was about to go public. That's when de Guzman died. Here's the real question: who knew? Walsh claimed ignorance. He said de Guzman deceived him. The assayers said they followed protocol. The investment banks said they relied on published results. Everyone had plausible deniability, but the beneficiaries were clear. Walsh cashed out millions before the collapse. De Guzman's family received life insurance payouts. The Indonesian government got exploration fees. Only retail investors lost everything. The Canadian authorities charged Walsh and de Guzman's supervisor with fraud in 1998. The trial lasted years. Walsh was acquitted in 2007. He died of hepatitis in 1998 anyway. De Guzman's estate was never sued. No Indonesian officials faced charges. No bankers were prosecuted. The assay labs settled civil suits quietly. The system protected itself. What Bre-X reveals is structural. The fraud wasn't an aberration, it was a feature of how exploration markets work. Assay results are proprietary. Samples are controlled by the company. Independent verification happens late, after billions are already invested. The incentive structure rewards hype. The punishment structure protects insiders. By 1998, Bre-X was delisted. Shareholders lost an estimated $6 billion. The largest mining fraud in history had evaporated like it never existed. Buseng was eventually developed by other firms. There was gold there, just not 190 million ounces. The actual ore body was modest, worth exploring, not worth $6 billion of retail investor life savings. The real scandal isn't that one geologist salted samples. It's that the entire apparatus, the assayers, the banks, the regulators, the brokers, had no incentive to look too closely. They all profited on the way up. When the collapse came, they were already paid. The system worked exactly as designed. It just didn't work for the people who actually bought the stock. Today, core sampling and assaying have tighter protocols. Independent verification happens earlier, but the incentive structure remains unchanged. Exploration companies still control sample collection. Stock prices still reward big claims. Retail investors still chase the dream of the century discovery. The mechanisms that made Bre-X possible are still in place. Only the execution methods have evolved. Bre-X wasn't a story about one bad geologist. It was a story about what happens when profit motive meets information asymmetry, when the people selling the story control the evidence, when the cost of being wrong is paid by someone else. De Guzman's role remains unclear, but the system that enabled him to matter, that's documented. Subscribe to catch the next financial collapse before the consensus narrative locks in.